Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the small caps that were in play today. So first up, we're going to take a look here at HMNY. All right, this is the big dilution play. It's closed down 4% today, as you can see on this chart. If it, with the they had a reverse split, so that changes all the numbers. But you can see here it was up here near $1,200 reverse split adjusted, and then now it's all the way down here at 6 cents. So it's lost basically 99% of its value in the last 4 months. But the CEO came out today and said that they finally have the right business model. The 3 movies a month is going to do the trick. Now, that's all good and all, but is it going to do the trick on the charts? We'll take a look here. As you can see, the share price has been below $1 for 7 days in a row. When the stock's down for 30 days in a row below $1, they receive a letter from the NASDAQ saying that they're out of compliance. And so unless HMNY can somehow get back above $1 organically by driving the share price back up above that level, then they're going to receive this letter, and then they'll have 180 days to regain compliance. Okay, and if they fail to do that, then they could be delisted to over the counter. If they don't want to be delisted, then they're going to have to do another reverse split. Okay, so these guys this is their reverse split history. Okay, so they had a reverse split already, a 1 for 250 reverse split just on July 25th, and look where the share price is gone in that period of time. All right, that's an incredible drop in a very short period of time. The problem is if they don't get the share price back up $1 again, then they're going to have to do the split all over again. Anybody that's traded dries or watched dry ships or any stock like that had the serious dilution that did multiple reverse splits, it can happen. And if you are holding to the reverse split, you will likely get wiped out. This is the reverse split from before right here. You can see this is before the reverse split. This is after the reverse split, and it did nothing but drop lower. They sold it from that $14 all the way down to 6 cents, straight down. It had that one bounce here on Monday, and that was the time to exit when it hit that top, and then it pulled back down again. Now people are trying to catch the falling knife. It's hitting the all-time low levels, so it's going to have to, you're going to have to be able to time this off the bottom here. If you look here at this is the listing requirements here. It states here that they have, what they need to do in order to become compliant. You could check this out here. You can check this out on the NASDAQ. There's many places where you can find this information. But the bottom line is the candles now, if they did work back into the bands and it did start to bounce, what you'd be looking for is the candles working their way back up to EMA4 at 24 cents right now. That's always the big resistance level to break for these dead cap bounce type plays. Now if you look here, the close, this was the all-time low close on this red candle. Today it closed just below that level, so that does signal more downside risk. If it breaks below this line right here, this is the all-time low, and so below this second green line, it tested that level today. It break below that, that's going to be a new all-time low, and so the chart is looking super bearish here. If you look here at the monthly chart, you can see it's down 86% this month. You've got this huge drop. We did call this top up here, stated that this could be a top, and that did end up being the top, and it pulled all the way back down. And so right now, it's hitting the all-time low levels. Look at this thing. It's been deadly trying to catch the falling knife. If you do, you have to use the bounces to exit. They're just short cover rallies. Okay, and look at the huge amount of volume. 1.3 billion shares almost traded this month alone. And so look at that. This is historic because look at the share price. It's so low they have to sell more and more shares. So it's just turned into a whole printing press type of operation. Look at the 15-minute chart here. You can see it has this falling wedge pattern. This was your signal to exit right here. This is what we call the climax spike. Okay, this long upper wick was the signal to get out. I did put out alerts in the chat that this was signaling people were taking profits, and then it did pull back. Once it broke back below this 50 simple moving average, if you didn't sell here, you should have exited here when it got back below the 50 or below the 20. These were all signals it was breaking down. There was just a lot of signals to exit. Now it has been getting back above and sucking people in, but the bottom line is if it doesn't get back above this middle Bollinger Band, it did close above into the close, but if it doesn't turn it into support at 6.6, it's going to have a hard time getting a new uptrend going. To the upside, it needs to break above the 50 and 100 simple moving averages. Once it's above this gold line, the 100 simple moving average at 7.8, that's when it could really get moving. They're coming down fast. It's forming this really tight pattern here, and it's either going to bust through this descending resistance line, or it's going to come back down and break through the descending support line. So yeah, we'll see tomorrow. Good luck for the bulls. Just know that this is just a trading vehicle, and that a reverse split is likely coming, and yeah, you will be likely wiped out if you hold through the reverse split. Okay, check out ABIL here. This is the big winner today, closed up 125%. Check out that downtrending channel. After the big run they had back here in June, they just walked this thing all the way back down, almost a full retracement, and then boom, big gap up open today. 8 was the big resistance level to break. I put out alerts in the chat that this was the key level. Once it broke above that level and then pulled back, that was a signal to lock in some gains. It came back down here and did bounce off that 300-day simple moving average. It needs to stay above that level at 579. If it can hold that level and break above 8, it could head higher. 10 and 12 are the two levels to break above. It just has to get through 8 to do that. Now, if it dropped below 579, you could see it come down here to test that middle Bollinger Band and 50-day simple moving average in the 450 support zone. Check out GST, closed up 18% today. RSI is above 50 or 30. You've got Fasto hitting 20 here. You'd like to see a break above that level. So this was a bounce for GST today. It did close above EMA 8, that line, and above EMA 4. That was the first close above EMA 8 since way back here on the 18th of July. Now what it needs to do is break above the bottom of the gap level. That's always a tough level to break. Notice how none of these candles closed above that level, even though all these candles traded above it intraday. Once it closes above that level, look for a run up here to EMA 13 in the top of the gap. A gap fill would lead to a run to the middle Bollinger Band and the bottom of the next gap. If it drops back below 15 or below EMA 4 at 16, that'll signal it's not ready to go. Okay, take a look at HTGM, closed up 24% today. Nice move, nice move. Okay, so it's back above all the moving averages except for the 100-day simple moving average. You can see all the lines are all converged here. These are all the moving averages on this chart. You can see them up here in the left-hand corner. The top moving average on the chart is the 300 or 100-day simple moving average at 359, the gold line. Notice how it hit that level and failed to stay above and pulled back. That was the tough level back here. It's been the big resistance level. So once it turns into support, once you see it trading above 360 and holding that level, that's when you can see it run back up to the 4s, and then you'd be looking for a run back up to this closing price in June just above 410. Now if it fails to break that 360 level, it'll signal it's not ready to go. Okay, let's look at INNT here. Nice move today. This is a bounce play. It's above EMA 8. Okay, whenever you've got a drop below the middle Bollinger Band, like back here, where this was a gap down between low of day on this candle and high of day on this candle, okay, when it starts riding EMA 4 and 8 lower, when you get a close above, that is a bullish change in trend. The last close above EMA 8 was way up here when it was still in an uptrend, before the day before the gap down open, and so now that this is telling us that the chart's heating up. Also look at the volume. It's always important to look at the volume. The volume spike is the clue that people have loaded here. Now if it drops below EMA 4 at 509, that would be a sell signal. It has to keep closing above that level to remain in play. That is the mental stop loss level. If you set a hard stop at that level, the MMs, the market makers, are likely to take out your stop and then push you higher. You have to be careful with these penny stocks. We like to use what's called a mental stop loss, but you have to be disciplined. Okay, look at EMA 13 here. That's the next level to break at 647. If it can get above that level, then this closing price here on the 25th of July in the middle Bollinger Band here at 780 will be the key resistance levels to break. Okay, take a look at KBSF here. Okay, very low volume, only 200,000 shares. I'm showing this because it's got a really tight chart. It's super wound up here. Look how tight that is. We have cores, ticker symbol KORS, reported earnings doing well. After hours, maybe that, I haven't checked out exactly why this was spiking, but this is one that we track. We've been watching the sideways channel, and in after hours trading, it's at 540. So that's putting it right in this zone right here. What it needs to do is close above the closing price on the 16th of July, and then you have the closing price over here on the 8th of May, and then over here on April the 11th. Okay, these are the three big closes. That's what these three red lines are. Once it's above all three levels, you see it trading above 355, 360. That should be the signal that it wants to head higher, but it has to close above. Look at the upper wicks here. So notice how the algorithmic programs, even though it trades above intraday, they have not been letting it break out of this very, very, very strong sideways channel. This type of channel is not your friend. This will drive you nuts if you're long and you're just waiting and waiting for this thing to happen. So it's always, many times the best thing to do is, instead of trying to time the bottom here, is wait for the break above resistance. You might not get the best low entry point, but at least you're not holding during the sideways action. So a break up above 560 or so, that should signal that it's in play, but you need to watch closely because it has to close above this level to signal that it wants to head higher. Okay, take a look at SGYP, closed up 14% today. This was a nice close above the descending resistance line. Okay, see this descending resistance line? Anytime you have a close above a descending resistance line, many times it signals more upside potential. It also closed above the 50, the 100, and the 20-day simple moving averages. That was very bullish. Okay, yesterday it did close above EMA 4. It was heating up. We've got volume increasing. So it basically needs to stay above 780, and then it needs to break above the high close here at 195. Okay, from the 12th of July, and then you have the 200-day simple moving average at 198. This will be the big level, 195 to 198, and then above that you have the closing price from back here on the 20th of June. Okay, these are the three big levels to break above. If it did drop down, below that 780 level, that would signal it's not ready to go, no longer in play. Okay, take a look at MNKD here. Nice follow through today, closed up 12%. Congrats to everybody that caught yesterday's video. You're now above 30 on RSI. The two candles that were floating below the lower Bollinger Band, that was our clue it was going to work back into the bands. It did form bullish engulfing reversal pattern yesterday. I showed this pattern in last night's video. That pattern was confirmed today by today's white candle. It did close above the EMA 4 at 121. It needs to stay above that level. If it dropped below that level, that would be a sell signal. To the upside, it has to break above EMA 8 at 129 with the close above. As you can see, this orange line has been resistance. Right, so it's been a tough level to break. So it's going to need to break above 138 with a close above EMA 13 to signal that it wants to head higher. Okay, take a look at MNKD on the 15-minute chart. You can see the big drop. Notice all the big volume on the third at the bottom. That's what we call the load. Okay, people loaded heavy. It has a very strong channel. Got above the 50 and the 100 simple moving averages. Now it's working on this resistance from over here on August 3rd. If it can break above, then what you want to see is this 200 simple moving average at 134 break. That's the big level. EMA 13 right now is being tested. That's lined up with the support zone. It would be best if it held 125. If it dropped below 123, that would be a major red flag. The middle Bollinger Band has been holding during this whole uptrend. That would signal consolidation. You could see it drop down to 115. To the upside, if it gets above 134, look for a run up to the 140s. You have the 300 and 400 simple moving averages up in that zone. Okay, take a look at IHT. This is a random play. It closed up 42% on very light volume. What is interesting, it did have this huge volume spike. Okay, last week, even though this is probably just a super dilution type of thing, you never know. They could run it. It closed today back above resistance. All the moving averages are all converged in the same zone between about 150 and 180. And so today's close at 185 was above every single moving average on this chart. So when that happens, we have to take note. Just take notice. It's on the radar to see if it might get something going. You never know what they decide to run. And so this is just a clue that it's heating up. It needs to stay above 180. If it dropped below 180, it would be no longer interesting. Has to stay above that level. And then what you want to see is a break above 2. If it gets above 2, it could run up here into the 230s. You have this high close in May. That's going to be the big level to break. You can see back here in May, it ran all the way up to 370. So this thing could get cooking with this volume right here. People might be holding and trying, getting ready to push it higher. I have no idea. Just caught my eye. Okay, take a look at CBAK here. Closed up 41%, you know, on light volume as well. This is another bounce play. This really isn't my cup of tea when you have this low of average daily volume, but I'm just showing this for the penny stock traders here. It closed above EMA's 4 and 8. If it can get above EMA 13 at 74 cents, then 82, the middle Bollinger Band, will be on deck. That's been the tough level to break during the downtrend. You know, the upside potential is it runs up to this 100-day simple moving average at $1. Okay, so keep an eye on it. You know, it has the volume spike on the break above resistance, so I figured I'd show it to you. Okay, take a look at GEVO, G-E-V-O. You know, it closed up 7% today, but they did report earnings, and you know, when they reported, they did also announce that they're going to be selling some shares here. We've got an offering of $300 million worth of stock. You know, that disappointed investors, and they were selling after hours, and so unfortunately it's down at 348 in after hours trading. It really sucks because it had just closed above the middle Bollinger Band. It always stinks when that happens. You know, it had this sideways channel forever here since the gap down. There's a gap between low of day on this candle and high of day on this candle from back in June, and then they went sideways on it. They dipped it down, and then it was just heating up into earnings. This was the pre-earnings rally, and then today the big disappointment with the offering. You know, anytime a penny stock says they're selling shares, people, you know, the algorithmic programs are set to sell, and just traders in general, retail trade, people sell on that news. And so right now the big thing's going to be holding this June support level. If it fails to hold this level, that's going to be a major red flag. It's going to have to get back above. You know, when you have very tight Bollinger Bands like this, and there's a break below the lower Bollinger Band, which is down here at 355, that signals downside risk. Now, if it did open below 355, that would put the candle below the lower Bollinger Band, and many times the candles will work back to the bands. But what we were looking for was a break above the upper Bollinger Band at 444 and above the closing price on July 9th. That would have set up a run to the 50-day simple moving average in the bottom of the gap, and that could set up a potential gap fill and run to the 100-day simple moving average. The chart was signaling that could happen, but earnings trump you know, the charts, and an offering is the worst, you know, one of the worst things that you could possibly hear if you're a trader, besides a reverse split. If you heard my stuff on the split stuff, I'm telling you, reverse splits, if you are a penny stock trader, is just bad news. And so yeah, so it can be good news. Okay, don't get me wrong, it can be good news if the company isn't diluting. Sometimes it does work out and they drive it higher because institutional investors can jump in once it gets above $5 and above $10. So I have seen it work out before, but when you have stocks that are diluting heavy and they're just selling shares and using the reverse split to keep dumping, then that's when it doesn't work out. So you have to, when you're a penny stock trader, you have to always be checking the finances. Okay, let's look at SYN here. This closed up 4%. Keep an eye on this one. You know, it had multiple red candles in a row. It does have an unfilled gap up here. You have a gap between low of day on this candle and high of day on this candle. You know, it had 4 red candles. I mean, that almost looks like a bearish deliberation block. But regardless, I mean, this looks like a bullish harami. You know, it looks like it has a bullish reversal pattern set here. You've got the long lower wick on yesterday's candle showing loading off of low of day with a little volume spike here. You know, not big volume today, but if it gets above EMA 4 at 12.7, it could get moving, possibly run up to 14. So it's not ready to go. It's a very ugly and dangerous chart. Just keep an eye on it for the bounce players. And one more to leave you with. This is super random. This used to be ticker symbol PQUE. They got delisted to the OTC. When that happens, volume just dries up. You know, only 227,000 shares traded today. But if you look back here, you know, back on the 1st of August, there was a big volume spike on the big drop. And so it looks like some people could have loaded here. So it's not ready to go as well. But if you see it get above EMA 4 at 0.84, it could make a run up to EMA 8 at 11 cents. So those could be some nice percentage gains if it got above that level. So just one to keep an eye on. Okay, thanks for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. All right, thank you.